All right, so we're back. Question number 6 on companies is on companies. So accounting for companies, part A, you're given a private placement. Okay, on 1st of April 2012, Jones Limited privately issued 200,000 ordinary shares of $5 each. Okay, they issued 200,000 ordinary shares at $5 each, which means they received $1 million. Okay, so how do you record this? Now, this is a private placement, which means you need to debit cash at bank, credit ordinary share capital for $1 million. You debit cash at bank, credit share capital, ordinary share capital, $1 million. That's what you have. Make sure to write a narration to record issue or to record proceeds from a private placement of shares. Okay, now part B, you're given a public share issue. Now keep in mind, when it comes to a public share issue, shareholders don't have to pay the full amount upfront. So they pay the share price in installment payment. Okay, so the shares were issued at $10 per share, $6 on application. That's when shareholders first apply for these shares. The second installment is $2, which is allotment. Once the shares are finalized, the directors will call for the second installment. And the third installment is call. Yeah, and it's paid at a future date. Okay. Now, how many shares did they issue? They issued 90,000 shares. They received 100,000 applications. Now, each application paid $6, which means the company received a total of 100,000 times $6, $600,000, which is transferred to a cash trust because that money does not belong to the company until they finalize the share issue. So you debit cash trust credit application. That's what you see here. To record cash proceeds or cash receipts from applications, $600,000. Okay. Next, they allocated shares to shareholders and refunded monies. Now, guys, keep in mind they only needed 90,000 applications, but they received 100,000, which means they received 10,000 excess applications which they need to refund. So you debit application, they can now reduce the liability 90,000 times $6. They can reduce the liability by 540,000. That's the reason why you debit application, you reduce the liability. And directors will call for the next installment, which is allotment. That's 90,000 times $2. That's what you see, debit allotment 180, and you credit share capital, ordinary share capital 720, the sum of these two. Okay, next we record the refund. Okay, how many applications they had to reject? So they issued 90, they received 100, which means they had to reject 10,000, and each application paid $6, which means they refunded $60,000, 10,000 times 6. That's what you see here. Okay, so how much money is held in the cash trust now? So initially they received 600,000 and they refunded 60,000. So they have 540,000, which they can transfer to cash at bank as they have finalized the share issue. Yep. So they can transfer $540,000 from cash trust to cash at bank. Keep that in mind. Okay. Last but not least, they paid $15,000 in share issue costs. So what you need to do is you need to debit, not last but not least, that's the next step. On the 3rd of April, you debit share capital, credit cash at bank, 15,000. Okay. Next, on the 1st of June, directors made a call for the final $2. They call for the next installment, which is call. Okay, $2. So it's $2 times 90,000, which is a receivable. So you debit call $2 times 90,000 and you credit share capital. Okay, and then they receive all of the call monies by the due date of 21st of June 2012. So what you do is you debit cash at bank, credit call $180,000. Okay. Alright guys, so let's move on to the next one. So this is very important. Make sure you practice this and also make sure to go through the tutorial exercise. Yeah. Right, let's move on to part C. Okay, it says White Limited has the following beginning equity balances as at 1st of July 2011. Ordinary share capital 400,000 shares of $5 each, 2 million. Preference share capital 400,000 shares at $1 each, 400. Guys, retained earnings is accumulated undistributed profits, which is an equity account. It had a balance of $500,000. General reserve is also an equity account, has a balance of 200,000. Okay, on the 21st of December 2011, an interim dividend was paid to ordinary shareholders of 20 cents per share. So there are 400,000 ordinary shares on issue and they paid an interim dividend of 20 cents per share. So how do you record this transaction? What you do is you need to debit retained earnings because dividends are taken from retained earnings. So interim dividend is dividend paid during the year. You debit retained earnings and you credit cash at bank since the dividend has already been paid. How much dividend they paid? So it's 400,000 times by 20 cents. That's 80,000. And that's what you see here. You debit retained earnings, credit cash at bank. Very important. You know how to do this. Okay, on the 31st of May, they transferred $100,000 from retained earnings to general reserve. Okay, so how do you record that? Now guys, when a transfer is made from one equity account to another, in this case retained earnings balance went down by 100,000, general reserve balance went up by 100,000. So you debit retained earnings and you credit general reserve. Business made a profit of 1 million, which is close to retained earnings, so you record it. And next, they declared a final dividend of 60 cents per share. Now guys, when it says the company declared a dividend, it means that they made a commitment, which means you need to recognize a liability. So what you do is you debit retained earnings, credit final dividend payable. Okay, 60 cents per share. So it's 400,000 times by 60 cents. It gives you 240,000. That's on ordinary share capital, and 40 cents per share on preference share capital. That's 400,000 times 40 cents. So what you do is you debit retained earnings, credit dividend payable ordinary shares 240, credit dividend payable preference shares 160. So guys, let me also move on to the tutorial exercise 2. That's what you see here. Okay, tutorial exercise 2. You're given final dividend for the end of 15 cents a share was declared. Again, when it's declared, you debit retained earnings, credit final dividend payable. So whenever you see dividends being declared or paid, you debit retained earnings. If it's declared, you credit dividend payable, credit final dividend payable. 15 cents times 100,000. So on the 9th of October, they paid that amount of 15. 17th of January, they paid an interim dividend of 8 cents per share. So it's 8 cents times 100,000, that gives you 8,000. So debit retained earnings, credit cash at bank, 8,000. Because they paid that dividend. Debit retained earnings 8,000, credit cash at bank 8,000. On the 30th of June, $18,000 was transferred to general reserve. Now keep in mind, this amount is transferred from retained earnings to general reserve. So debit retained earnings, credit general reserve. Alright guys, so make sure to go through these revision questions and also these tutorial exercises. Very important, especially the week 12 tutorial exercise questions. Very, very important. Let me know if you need any help. I'm gonna upload all these videos. Make sure to watch these videos and to complete your revision questions before you go to the exam. Alright guys, so best of luck with your exams, especially in ACC 1001. Thanks.